Okay, guys. So today I think we are going to look at the selection of supply and demand and mitigation, which is the return to the zone. Not mind the background. I think later on I'm just going to what you just have to focus is the main source here. So right now, for example, we have some candlesticks. Let me make it green. And make it green. Green, very thick green. So let's say this is bullish candlesticks. Mr. Very thick green too. So okay. So right now we have a form of candlestick. So remember this is a bullish structure. Let me print another one again. I think I will take it close. This will actually go long. This will actually go long again. So don't mind me because of the diagram I'm about to put here, so that yes, I think everything is going to be intact and you are going to understand something. So we are having some bullish. This one is bullish, so I think it's going to be up, not down. So we are having a bullish, as I'm saying. We have another print of bullish candle. I have another print of bullish candle. So let me make this long a bit. Understand? So we have three bullish candle printed and this one red. Then we have a red candle printed again. This one, so let me make it red. So we have a red printed that engulf this. Uh, so that engulf this candle. Understand me? We have another printed candle that engulf this bullish candle. Price was going up and we end up printing another candle. So this is a bearish engulfing. This is a bearish engulfing that price just printed and engulf this. So what then happened? We still have a continuation to the downside. Continuation to the downside. Another continuation to the downside. We have another continuation to the downside and so on. So what did you see here? What did happen? It shows that the bearish are in control of the market. So right now we are going to mark this as our supply are in control. Supply are in control. So if supply are in control, we are going to like mark out our return to the zone. Return to the zone will be when we mark up the last candle of the bullish, the last candle of the bullish. So actually, let me just make it with my we are in the 50 minutes time frame, so 50 minutes time frame supply. So we have 50 minutes supply. So we have something like this, and price end up coming back, and price end up coming back from here. Let's just bring it down and give a good narrative. Just focus on what I'm doing right now. So we end up having a candlesticks that print and come back to supply. So this is selection of supply and return to the zone of supply. So price return to the zone of the supply. What then happen? We will wait for our entry criteria, which we are going to check that one on the next video. So, but what then happen? Let me answer this. What then happen? As price come back to the entry of supplies, the next move you will see is the bearish move again. The next move you see is the bearish bearish move from here. That's the next move you see. A bearish move from here. So this is a valid supply zone. So we end up taking the low of demand, which is this one. The low of demand has been taken and price return to the zone and shift again. So we end up taking this again. And mind you, price will not come back here and mitigate. So price will not come back directly straight and mitigate here again. No, we have to mitigate to the interaction. What really break this? Then price will come back and mitigate it again. So we may likely to see, okay, this is the last candle that take the high. This is the last candle that take the high. This is the last candle that take the low of the demand zone, and price is going to like end up coming back, and price will like end up coming back to mitigate and continue bearish and continue bearish. So this is return to the zone of supply and valid mitigation. So if price didn't give you mitigation, let's just shift this low again from the week here. Yes, so that we can have our mitigation, even though price didn't enter deeply, so that we can have our mitigation Confirm. Yes. So this is a valid return to the zone of supply. So this is a valid return to the zone of supply, and that's vice versa. If we are going for a demand, if we are going for something like this as a demand zone, so let me just like copy this and give you example of demand zone. I wanted to remove the chart and make it blank, but I see it's not really working for me. But I really like try to create a space. Like okay, so right now this is sorry. So right now this is a valid return to the zone and mitigation of supply zone. So let's just look at the demand zone. What then happen? So you just buy yourself. So let me copy this and shift it. Confirm. So we are having a bullish structure. Let me bring a bearish too. A bearish structure because we have already draw everything. We'll just like be copying them and I will be giving you the examples of return to the zone of supply and demand. So we are having a bullish structure and we end up having another bearish structure. Then price started to reversing. Before this price start reversing, I think we have to like give a candle here. After I give a candle here, we have price pick up. So we have to like do something like this. What happened? It shows that demand are in control of supply. Why? Because we have this momentum shift. We have this momentum shift. What are we expecting? We are expecting for price to come back to the demand zone. So how can we mark up our demand zone? The last candle before price take the high of supply is our demand zone. Do you understand? So we have this candle here and we mark it. Is it valid? Let me mark it as our demand zone. So this is our demand zone. What are we really looking at? We are looking at price to come back. We are looking at price to come back. Let me copy this one. We are looking at price to come back to the zone. So for price to return to the zone, yeah, so that we are going to take our valid demand zone. So our price return to the M3. What are you expecting? You are expecting to see that yes, we still have a bullish. Remember, the demand zone are in control. So we are still expecting to see a bullish move. We are still expecting to see a bullish move. We are still expecting to see a bullish move, and this happened. It shows that this is a valid demand zone, and the demand is, and this is a valid demand zone, and demand are in control. What else again we may be looking at for bearish move to the market, for price to come back and mitigate, for price to come back and mitigate. So let me just remove all this. Let me just remove all this. So here is the last candle that take the high of supply. This is the last candle that take the high of supply. Are we going to market? Yes, we are going to market because it's valid. It take the high of supply, and price finally come back to mitigate it. So as price mitigate it, what happen again? We are going to expect to see that yes, we have a bullish move. We'll then be expecting to see a bullish move in the market. Then expect to be seeing a bullish move in the market again. Did we take the high? Let me copy and paste again so that we can have a perfect example of what we are going to be looking at. Do we take the move? Yes, we take the move, and price will always come back to mitigate demand or supply zone, which is telling you. So let me just like give this one as supply and in control, and also demand are in control. Demand in control. So this show that yes, we have a valid demand and in control of the market. While this one it shows that supply are in control of the market. So this is how you will mark and select your valid point of supply and demand that you are going to be trading in that direction. If supply are in control, you are always going to be looking for that confirmation that will tell you that yes, supply are in control so that you are going to be selling. But if demand are in control, you are always going to like go for that bullish move. So this is the diagram and how you are going to be looking at the market. So and peace guys.